Hey AJ, thanks so much for your comment. It looks like Mercury Bank is on Anand is on a flight right now, so we actually had somebody who's going to step in, named Zen. But let's go ahead and get started. So thank you everyone so much. My name is Patrick Driscoll. I am a general partner at StartOut. We are here to demystify basically limited partner and angel investing. And I'm thrilled to have some amazing panelists from a broad array of backgrounds joining us. And with that, and before we get into the reason why we're all here, I'm sure you're all eager to hear about limited partner angel investing. I wanted to do a brief background on StartOut itself. So StartOut's mission is to accelerate the growth of the LGBTQ plus community. It's really around engaging with and driving the economic empowerment of the LGBTQ plus entrepreneur. We want to make sure that all of our founders, all of our investors have access to amazing opportunities to shape and succeed in the workforce of the future. StartOut has grown dramatically. So it was launched in 2009. It has since launched its flagship accelerator, quote unquote, program called the Growth Lab. There are 56 graduated companies, have raised 756 million in funding, 3,650 plus jobs. So not too shabby. There's over 300 mentors within the network with 120 plus active mentorship pairs. I myself am a mentor. And I have been paired with some amazing organizations across the globe. I've actually had founders in sub-Saharan Africa and Colombia, throughout the US as well. So StartOut provides expertise in fundraising, marketing, PR for all of these founders in the network. There's also a great, which is kind of relevant to this group of people, a great organized backbone that focuses on investment opportunities. So if you are curious, you could join the private online network with a Q and its forum to get access to some vetted deal flow. There are 50 plus community events per year, such as this one. Those are both in person and virtual. It's a great way to get in touch with local community members around you. And of course, there are millions of social media impressions to inspire entrepreneurs from all over the world. Shout out to all of the supporters of StartOut. So these are our sponsors. Love to, get a shout out to them. So my name is Patrick Driscoll. My pronouns are he, him. I'm general partner at Chasing Rainbows. So Chasing Rainbows is an LGBTQ plus venture capital fund. So we are a $10 million fund that invests into early stage queer founded startups. If you're curious to know more, you can go to chasingrainbows.vc. And I've been part of the StartOut network since 2019, where I actually met my business partner emceeing a demo day. And before I get over to the panelists for their introductions, I want to do a quick logistics overview. If you have a question, which we will have a Q&A at the end of the session, please put it in the Q&A function, not the chat function. So we will be monitoring the Q&A function. And that makes it super easy for me to go through those questions and select the ones that I'm going to ask the panel. So Q&A function, not chat function, and then we're good to go. All right, and with that, I'm going to let our panelists introduce themselves. So I'm going to actually show their glorious faces and then stop sharing screen so you can see them in real life. So first up, we have Natasha. I'll pass it off to you to do a brief intro on everything Natasha.
Thank you. Excited to be here. My name is Natasha Hsieh. I'm an attorney and a partner at Silicon Legal Strategy. So the focus of my practice is advising startup technology companies, the founders who run them, and the investors who invest in them. I assist VC, angel, and strategic investors in their investments and commercial contracts, as well as exits. On the company side, I'm essentially the outside general counsel and work on financing, day-to-day governance, and M&A for our company clients. And so I want to mention one last thing, because I'm the attorney on this panel. One housekeeping reminder is this is educational purposes only. There's none of the information should be considered as legal advice, and participation does not mean there is attorney-client privilege between me, Silicon Legal, or anybody in the participation. Thank you.
Love those caveats. And I will pass it off. Thanks so much, Natasha. I'll pass it off to Christopher, to Chris. Yeah.
Hi, everybody. My name is Christopher Stroup. My pronouns are he, him. I work as a financial advisor for Abacus Wealth Partners, located in Santa Monica, California. Abacus, we are a fee-only independent firm, a financial planning firm, with a focus on impact investing, socially responsible investing, traditional wealth management, and also making financial planning accessible to all. We believe that everybody deserves quality financial advice. Most of my role is focused on partnering with entrepreneurs. So business owners, people who I would say a lot of their wealth is wrapped up in their business and concentrated. And so I serve as their trusted advisor to sort of help them realize that wealth, de-risk, do it tax efficiently, whether they're, trying to ultimately reach their financial goals. Many of my clients that I work with are members of the LGBTQ plus community, which brings a lot of fulfillment in my job. And a lot of them are angel investors or LPs on their own. So I look forward to sort of bringing the financial planning perspective of what that could mean for you on your financial journey and how we think about it when we try to build a financial plan on behalf of our clients.
Fantastic. Thanks so much, Chris. And as a new resident of LA, I can't wait to hang out with you in person. So
let's make it happen.
Absolutely. And now, last but not least, we have Zen. Super thrilled to have you with us as well. So off to you, Zen.
Thanks for the invite. Christopher, I need your number. Side note, so yes, I'm Zen Mac. I'm recently newer to the investment world and recently new to Chasing Rainbows as a limited partner. I kind of had my own journey in investments, in angel investment, startups. In a lot of ways, I've been in the startup community for about 20 years, and a lot of it as an operator within startups themselves. I've also been working in the talent and people space, partnering with startups, whether that's a 4-person startup at a WeWork space, all the way up to a Series D hyperscale, and kind of been firsthand witnessing how some of these startups function with VC capital, whether that's a small little check or whether that's a humongous check, and how that works. And a lot of it kind of looking at that journey, if you will, with some of these companies, I felt like I wanted a little bit more of that action myself. I wanted to see how this originates. Where does the money go? How are they being spent? And as an LGBTQ member, and I see the research that goes into who gets funding, how they get funded, and who doesn't. And so I wanted really my dollars to count for something a lot closer to home, a lot closer to the community that I'm in and that mattered to me. And so that's kind of how my journey ended up coinciding with Ben and with Patrick. And a couple of calls later, here I am.
Thanks so much, Zen. Yeah, you put us through the ringer, which we appreciated. I believe I said I was a general partner at StartOut before. I'm a general partner at Chasing Rainbows. So correction there, which is the VC firm that focuses in the LGBTQ plus founder population. But enough about me. We're here to talk about being an LP and an angel investor. And I'd love to start the conversation with a question directed to Chris. But if there's any insight that, Zen or Natasha has about this question, feel free to dive in or jump in. Chris, you advise clients on their investment strategies pretty regularly, right? So what do you think that LP and angel investing could bring to the table in terms of diversifying their portfolio? Why might it be a strategic option for them to jump into the LP and or angel investing pool?
I mean, I really think about it I like to think of 3 things that I want to just mention. One is diversifications that you mentioned. There's a lack of correlation. So if you're an angel, you're an LP investor, typically these investments don't correlate well with the traditional market that we all invest in, whether it's stocks, bonds, equities, things like that, which can add to the diversification of your portfolio and ultimately help mitigate risk in the long run of volatility. There's also the potential for higher expected returns. Like any investment, no return is guaranteed, but with the risk of participating as an angel investor in an LP, you have the opportunity to potentially benefit greatly from the returns that could be expected with these early stage companies. There's also the third element, which I don't think we talk about enough, and I love that Zen already alluded to this, was greater alignment of your money and your values. I think it's really important to understand that how you invest and every dollar that you spend is an expression of what is important to you and what you value. And so I think part of the angel investing or being an LP is we find a lot of people get excited about the impact investing element. So using dollars to benefit companies, organizations that they find valuable to them, whether it's something that cause is important to them or it's a community that's important to them. That's a really good angle that we see this kind of investing being able to come through in terms of someone's portfolio and ultimately their financial plan, in terms of just the better alignment of who they are with their money.
Love that. And perhaps just piggybacking off of that, over to you, Zen. You mentioned that you want to invest based on your values and your community. How important was that when you were making your decision about being an LP? And also when you consider angel investments, do you pay attention to the mission or alignment of the founder in those situations, in those opportunities as well?
That's a great question. And you know, the opposite of that was kind of how I came to this decision, is I'm going to invest in something, right? And so if I were to invest in something that is kind of anti what I stand for, or companies that make products that actually make things harder for people that are like me to get the services that I'm looking for or support the causes that I care about, then that doesn't seem to jive either. So in a lot of ways, I'm answering your question by saying, I'm going to have to invest somehow, some way in my portfolio. So do I put the money here or there, or where is it going to make the impact that's going to, one, give me some investment back, but also two, create the community that I want to be in? So that's one, right? Does that kind of answer your question by telling you what the exact opposite of it might be?
Absolutely. No, I think that makes a ton of sense. And I know for a lot of folks that I chat with, and as we are trying to attract LPs, and even when we're making a decision about who we invest into as a venture capital fund, we're trying to make sure we find founders, for example, that are mission aligned, right? So we want to find folks that we want to work with. Ideally, it's not just going to be, you take my money, I never see you again. 10 years from now, we might get a return, we might not, but I haven't followed you along that entire process, right? It's a back and forth, it's a relationship. And that's something that we actively look for. And ideally, when we're looking for LPs, we're trying to find LPs that want to work with us in that way as well. Like yourself. So thank you very much. So taking a step back a little bit away from what we were just talking about, I want to maybe define what an LP is versus an angel investor, since there might be some folks on this call who are a little bit more 101 in terms of their comprehension of both of these terms. And I know when I chat with people, specifically high net worth folks or people that are considering an investment opportunity, they don't even know what being a limited partner is. So Natasha, I was curious if you could kind of define LP to start, and then we can get into some angel investing definitions as well.
Sure. So LP limited partner would be somebody that participates in a venture fund like Chasing Rainbows. You contribute and invest in the fund, and then the fund, the general partners, so Ben and Patrick in this case, they go out and source the deals and do the vetting, do the diligence, and they're the ones that help you and help essentially the aggregate investors where to put that money. So it's a little bit less, you don't need to be in the action as much as an angel investor. Oftentimes angel means you're the one that's talking to the company, talking to the founder. But an LP, allows you to, one, have access to greater portfolio companies, and also you have somebody who is skilled and doing this every day, kind of help you manage and manage the funds.
Absolutely. Thank you so much. And I know as a general partner, we are the ones in the weeds, to reiterate your point. So we're sourcing deals, we're conducting due diligence, we are putting LP money to work, basically. So the way that we attract LPs and that we prove that we're capable GPs is through that deal flow, through our communication style, through our track record, through our prior work experience and our network as well. Chris, over to you in that vein. Do you have any experience in working with clients on angel investing decisions versus LP investment decisions? They're both kind of similar risk threshold. An LP might be a little bit more de-risked because it's across a broad portfolio. Again, this is not advice in any sort of way to anyone who's wondering. But how would you kind of classify both of them if someone would come to you asking, I have this great LP opportunity versus an angel opportunity, or perhaps you can keep it top level as much as you'd like here.
I think part of that is how active a role do they want to play? I think the opportunity here as an angel investor and LP is you may have expertise yourself, which is why you're deciding to invest in this particular industry or niche. And that expertise could be valuable to the founders of that organization. And so if you are going to provide mentorship, things like angel investing could be extremely advantageous to you, and you could take a greater risk because you're willing to invest more of your knowledge into it to ultimately benefit the company down the road. If you want to play a little bit less of an active role, maybe being an LP, a little less risk, more diversification. I think it depends on the investor. What's the risk profile? What's their time horizon? How much capital are they willing to risk? So part of our role as the advisor is to help them define that. We like to talk to our clients about critical capital. So what is capital that they can't afford to lose given the lifestyle that they told us that they want to have? And what is risk capital? What is that money above the critical capital line that we could put in catalytic investments like angel investing or LP investing? So we try to work through that with our clients when developing financial plans to help them understand what bucket they could fall into if they want to.
Totally. No, that makes sense. And kind of fits right in line with what we've been discussing. Zen, I have a quick question for you. So I'd love for you to talk a little bit about your journey since you've been in the tech space for quite a while. And, perhaps you didn't start out ever thinking that you would be an angel investor or an LP. You just wanted to start a company, start something, build it. And now you're at a point where you could, write a check for one of these two opportunities. Can you walk us through what that process was like when you started thinking about being an LP or an angel investor, and what kind of sealed the deal for you?
That's a long one. How long do we have? So that's a great question, because for me, I knew that at some point, and I think fortune, right, kind of dictates a little bit of the timing and when I was able to do so. But the reality was I've always wanted to be a lot more involved in startups, especially at the earlier stage. And so part of the attraction in partnering with Chasing Rainbows was you invest early, and you invest early with the opportunity to continue on with organizations. And in my experience, a lot of times, by the time a company gets to their later stages, you can't get in. It's already a known entity. There's a lot of bigger fish in the sea at that point. And so finding these unique opportunities at the very early stage was really attractive. And part of the reason why I chose to go with Chasing Rainbows. But the other thing too is I'm also part of other funds. And it's a much more of a backseat kind of approach. Well, not even backseat, it's more like a tour bus, and I'm kind of the second to the last row. You really have nothing to say. And so part of it was going, I do have a lot of experience with startups. I do want to provide some knowledge sharing or quite frankly, learn from each other. And I have the time and I also have the energy and appetite for it. And so I really wanted to find folks that I cared about in the community that I care about. I keep talking about this, I'm sorry, but it matters to me. And I've seen it at a very large, Fortune 1 kind of company where, yeah, there are folks that are underrepresented, but they're kind of the outliers. And I really want to work in a community where we're not outliers, we're the focus. And so I think that also really motivated me to participate here. The things that I went through kind of due diligence wise was I did talk to other people who decided to invest with you. I did look at your track record. I did have an in-depth meeting about how you evaluate opportunities. And to me, that sounded good. It sounded fundamentally sound. And I think a lot of times that's what you can really look for with these types of investments. I mean, there's just so many great ideas out there that fall by the wayside because of certain presentation, because of certain style. And I don't think that's the reason why ideas can't take off. And so for me, those are the most important pieces of how I decided and my plan on what I was going to do. Now, granted, and Christopher, this is why I want your number. This is not the only strategy of mine, right? This is one of. And so to me, the risk capital here is, if I'm going to do it with somebody, I want to do it with people who care and people who are like me, who value things I value, and who are founders who struggle with everything else being a startup founder, on top of also not getting a lot of time and attention by the broad, the broad market.
That's beautiful. Also, not getting the time and attention in the broad market. We all kind of can read between the lines based on some attributes that are out of all of our control. And I'll just quickly say, we appreciated so much going through that due diligence process with you, Zen, and for all LPs on the call. When you're thinking about all potential LPs, when you're thinking about making an LP investment, you should do all the things that Zen mentioned, right? So you should look into the track record. You should ideally do reference checks. You should call founders potentially who received investment from your GPs before. You should chat with another LP, look at everything, right? And you're going to want to work with these people and trust them with your money in order to get a return on your investment, right? So do as much work as Zen did. And I think you should do like a due diligence checklist, Zen, because that was pretty robust, I'd say. Now, in terms of back over to Natasha, I'd love to get a little bit more into return timeline and well, first I'd like to dive a little bit more into the definition of an accredited investor, if possible, to make sure that everyone on the call knows what that means, because it could limit or open up several doors for you in terms of being an angel or an LP. So if we can get into that definition, and then I have another question for you, but I don't.
Okay.
Because people always forget the second
Foreshadowing.
Yes.
So I guess I'll back up and kind of the big picture, under securities law, the basic rule is companies can only sell equity if they're a public company. And that means they make periodic disclosures, they disclose all the material information about the company so people can make a smart investment decision. For private companies, in order for them to sell shares and raise money for the business, the sale needs to fall under an exemption under securities law. So the two most common ones that we see, one is for selling to insiders, like when you sell founder shares or somebody who's the director or executive of the company, and then the other one is this accredited investor exemption that Patrick mentioned. So accredited investors are individuals or entities who meet a certain essentially a financial criteria. So like Chris said, once you've reached that, you have some risk capital that you can use beyond the critical capital, then we kind of look at that as, okay, if anything happens, if something catastrophic happens to what you invest in, you're still going to be okay. You can still maintain your lifestyle. And so it's actually for individuals, it's net worth of $1 million or income of $200,000 for the last 2 years, and also expect to be around $200,000 this year as well. So it's not really a high bar, especially in California in the high tech world. But I also think this is something that essentially, somehow the law defines that as, if you make this much, or if you haven't this much asset, you're going to be okay. So that's a quick and dirty accredited investor. And sorry, oh, you need to be, usually as an angel investor, you need to be, an accredited investor. Most companies will ask you to certify when they sell you shares or other instruments that you certify that you are accredited.
Absolutely. And there are, so that might seem insurmountable to many folks on the call for the limitations and monetary requirements. Are there other opportunities that someone can consider, perhaps through SPVs or through crowdfunding, just to start getting involved and maybe their foot in the door as an angel to build up their reputation?
Yeah, for sure. So with the crowdfunding, now we see a lot more people being able to participate, and the companies are able to raise money, smaller checks from individuals directly to help them to instead of asking for everybody to be an accredited investor. So that opportunity is definitely there. I think it's rare, probably they will probably need to be in the individual angel investor category, because if once they've reached a threshold and they go with you, or one of the VCs, you would not be part of that crowdfunding as much. It's really, I think they're getting into the even earlier stage of just having an idea and supporting that company.
Absolutely. And in terms of timeline, and we're an early stage fund, so specifically for early stage investments, Natasha, what do you typically see or expect for turnarounds? And Chris, perhaps you can answer this question as well, just to set the stage for Zen, who's now an LP, who's going to wait for that extended time.
We're setting Zen's expectation.
Make sure we're all aligned with when like DPI distributions are actually paid out.
Yeah, so essentially the VC fund, as an LP, you make money when the VC fund's investment comes in and they exit, that portfolio company exits. I would say 5 years is probably how long it takes people to really get to some exit point. It's really, it could be a sell to a larger company. For IPOs, it's probably even longer. So it's sort of, you are kind of working with the company for the next few years at least to get them to an ultimate like good outcome. I don't know what Chris sees for his clients.
Yeah, I think on this front, in terms of like the financial planning horizon, right? We're looking at something we're thinking that this is 7 to 10, if not longer, years away, right? Like we're not planning to see a return on this anytime soon, but that's okay, because you have other investments as part of your portfolio that fit other risk dimensions for you, and this sleeve just serves one purpose. So typically we're planning for a longer term when you think about investing in this kind of opportunity.
Awesome. And that's in line with what we've heard. If you do have an early exit, for example, in a VC fund, there's an acquisition or a merger, typically an acquisition. There are options where there can be distributions paid out, or it'll be reinvested into the fund. So depending on the fund that you decide to go with, if you are going to be an LP, you need to take that into consideration. If you need liquidity, getting to the risk capital definition again, make sure that it is money that you are okay with not seeing for a long period of time, unless you speak with the GPs or the fund managers and they have some sort of setup where there might be distributions paid out a little bit earlier. But work with a financial advisor, work with your legal team, work with your peers in order to determine what your threshold might be. Now, I'd love to get into some pros and cons of angel investing, because we can all be here talking about the amazing opportunity that angel and LP investing will bring to the table. Everyone becomes a billionaire overnight, quote unquote. That's not the case, right? So perhaps I'd love to start with you, Chris, to really manage expectations, to make sure that folks understand that this is risk capital, right? So what if you could potentially, I'd love to hear each of your perspective actually on the pros and cons of angel investing and then LP investing as well.
I mean, I think one, returns, right? You have the potential for higher returns, but you also have a really high failure rate, right? Thinking for every Uber, there's probably 1,000 casualties. And so, you got to understand that it's a numbers game here and you may not succeed. I think another benefit is just diversification. We talked about that. But the downside is illiquidity. If you have a cash crunch, this could be problematic. And so a part of it is planning around those risks and trying to mitigate those risks that come with this kind of investing so that you don't fall into that trap, in year 5, year 7, year 10, where we don't know yet, but life could deliver a curveball. I think the opportunity to just participate in new ideas and innovations, that could be exciting as an opportunity here. It gets back to that impact play, ensuring your dollars are a true representation of yourself and what you value. I think that's really a good opportunity here in terms of how to take advantage of angel and LP investing.
Zen, any pros and cons from your perspective?
Yeah, I mean, I'm an angel investor in a startup that I just really, really cared about. I never worked with a founder before. I don't know that I have high confidence that it's going to succeed. I also don't wish it to fail, of course, but the statistics show 9 out of 10 startups fail in their first year. And so in a lot of ways, I find that unless you truly care about it, I don't know how to pick winners. I mean, that's part of the reason why I became an LP. It's because I like what this company does, but I'm just not sure. So I diversified my portfolio. I'm also kind of hitching my wagon to people who have a lot more experience determining the founder's capabilities of steering a startup through its first 1, 2, 5, 10 years, right? And so for me, I feel like having both is important. One, I like being involved, and so angel investing is always going to have a draw for me. But 2, I wouldn't invest in anything that I'm not willing to lose in angel investment. Whereas as an LP, I think I've got a little bit more, I guess, confidence in picking something that this team at Chasing Rainbows is going to find. But also because you're diversified, I think the risk is a little bit lower. But either way you look at it, you're not seeing this money for a long time. It's almost like kids in college. Your kid's born, they're gone, and you see them when they turn 18. And maybe they grow up to be a helpful member of society, hopefully. Right? That's kind of the idea.
I totally sometimes think about our portfolio and future portfolio of companies as our children. So that's an apt metaphor. Natasha, anything from you?
Yeah, I think really what Chris and Zane already mentioned, it's really kind of thinking about how much you want to be involved. And there are for sure times when you're the angel investor investing individually and you can spend the time and you have the expertise in the industry or making connections for the company that would be super helpful to help their business elevate their business and move that forward. And then for LP, it's really, you have people who do this day in and day out. They hear what's on the market. They hear the hottest company on the street before it becomes the hottest company. And also when you're an LP and you can pool money with all the other LPs, that means the fund is able to drive better terms because you're not investing at $5,000 or $10,000 as an angel investor, but the fund is able to put in $100,000 or $500,000. So they can actually negotiate for some rights, for example, information rights, so that they can have more detailed understanding of what the company is doing. And for participation rights, like Dan mentioned, sometimes when the company gets too hot in the later round, you can no longer buy in even if you have the money. And so coming in early and being part of the VC that invests allows you to negotiate for some rights that you can continue to support the company and be part of that success if you want to. So those are some of the individual versus VC LP type pros and cons.
Love it. And now, I'd love to get into some of the Q&A that we've had coming in left and right. Thanks so much for answering all of my questions, which were hopefully useful to everyone. Just before we do that, I do want to to really reiterate the whole alignment of what your interests are in terms of sourcing and finding potential GPs to invest along with and startups to be an angel investor in. So there are several opportunities in groups like StartOut. If you care about the LGBTQ plus community, I'll use that as an example. You can go to StartOut, you can go to Lesbians Who Tech, Out in Tech, these great affinity groups that have birthed, quote unquote, a large plethora of fantastic startup leaders. So you can find a really good pipeline there and then make a decision based on the founders you engage with that you're going to be part of that story, right? Perhaps you're the first check in, perhaps you're investing in the pre-seed round as an angel investor, perhaps you're in their friends and family round writing a really small check. Whatever it might be, make sure that you find a company that either comes from the community that you care about, or perhaps their business model is something that you are interested in. Same goes for fund managers. There are funds that focus in different communities. There are funds that focus in verticals like fintech or biotech or medical innovation or any type of industry. You can find a fund that focuses on it. And specifically for first-time fund managers and emerging managers, there's likely an opportunity for you to become an LP. For funds, just one quick caveat, funds that are $10 million and below, they're allowed to have 250 LPs. For funds 10 million and above, they're limited to 99. So the likelihood, unless you're writing a significant check and getting into one of those larger funds as an LP, is quite low. However, for those small funds, that's really the opportunity for you to become a limited partner there. Great. So I'd love for, and I just touched upon this, but I'd love for anyone to jump in on this question around sourcing and how to pick winners out of a large plethora. And I know, Zen, you kind of already alluded to this, but when you're seeing so many deals, what do you look for? Specifically, I'll start with you, Zen, and then Chris and Natasha, feel free to jump in with your own perspective.
This may not be very scientific. And I'm here.
Yes. Yeah, we can hear you.
Ah, okay. This is not scientific at all. But when I look at these opportunities, the first thing I think about is who would I use it? Would I, as a user of this, whoever they're trying to sell this to, like, what's the revenue stream? Oh, I'm losing you. Are you still there?
Yes. Yes, we can hear you.
We can hear you.
Okay. Cool. So to answer that question again, a little bit more succinctly, is does the business actually make sense to me? Can I explain it to myself and follow a revenue stream and go, could I think about all the different ways in which this doesn't happen? Do I care about the business that it's in? So for instance, something that I personally, and nothing against people who do, but I don't really care about businesses that bring food faster to somebody. That's fine by me. Great, have at it. But I don't really care about that. So I don't want my dollars to go and benefit something of that cause. But if it's bringing healthcare to underrepresented people or underserved people, yes, I'm automatically going to prioritize those types of organizations or adjacent to that. So those are the things that I look at when I evaluate whether or not this is something that I'm interested in participating or, and when I mean participating, I mean putting my dollars to help them succeed.
Anything to add, Chris or Natasha?
I mean, from my end as the financial planner, we leverage other experts to do the due diligence, right? We have a values conversation with our clients to understand what is important to them, what do they want to invest in, how much capital can they devote to those ideas. But we rely on other experts who have more time, better expertise on doing this kind of work than we do to properly source and do the due diligence into funnel opportunities that would hit the bullseye on behalf of our clients, and that could be a platform, that could be someone we subcontract to. But from my perspective, I know there are smarter people out there looking at this who I'd rather lean on, and then we use their advice to make informed decisions on behalf of our clients.
Well, that any final words here, Natasha, or we could go to the next question? Yeah, pretty well-rounded responses.
Yeah. I love it when I'm last one, because then I'm just like, oh, what they said was great.
Yeah. strategically set up. In terms, so Hsieh asked the question about valuating early stage companies specifically, and I'm happy to jump in here too. But how do you do a valuation for pre-revenue early stage companies? So, do any of you have insights there? And this could be the same for an emerging manager who perhaps doesn't have a significant track record, and how do you then make a decision based on limited factors or information? I'll take a stab at this, and maybe this will get the wheels rolling, since my job is literally diligencing early stage companies. And for us, we take stock of three key terms: the TAM, which is the total addressable market, the team, and traction. Right. So if a company is, I'll start with the total addressable market, which is essentially the opportunity that a company has to grow. So perhaps it's starting with a minimum viable product or a pilot with a very small subset of that market, but it's going to ideally be able to grow and scale with that J curve into this larger market, which is going to bring in immense return for the investors, allow that business to scale very quickly, perhaps diversify its product line or service line, whatever. So the total addressable market is quite important to us. The traction, there needs to be some level of traction, whether it be letters of intent from different partnering organizations that will launch a pilot with them, or perhaps be a first buyer or someone who's going to test the products and services. Those are typically non-legally binding, but we do like to see them. They do hold up in terms of credibility and validation. There could be, if it's post revenue and they started getting some revenue in the door, that's a huge indicator to us. There even could be social media brand. Someone might have a huge following under their belt as a founder, and they're leveraging that to be a successful founder that's going to launch. So traction is kind of defined broadly, but for a pre-revenue early stage company, you really have to pay attention to all of those different types of traction. And then the team is probably the most important component, which I would imagine most emerging managers look for, and angel investors and even LPs considering and writing a check into a first-time fund manager or an emerging manager. The personalities, the background, the tenacity, the adaptability of the team that you're engaging with through the diligence process of seeing if you're actually going to write a check for them is super important. So what are their backgrounds? Who do they know? How big are their networks? Who are they sourcing from? Do they have a high hit rate? Are they finding good deals if you're an LP looking to invest into a fund? Do they have access to great founders? What do they look like on LinkedIn, their socials? That might not be super relevant or important for you, but that could be a part of their brand building strategy. So the team is also very important, because you're also going to be working with that person for a decade potentially. So, we heard the timeline could be anywhere from 5 years for early exits up to 10 years, depending on being an angel investor or even an LP. You're ideally going to be getting newsletters from these folks or having calls with these folks. As an angel investor, you might have an opportunity to sit on a board or be an advisor to that company. So you're going to really have to get in the weeds with these people and be prepared to, make some hard decisions or help steer them in the right direction. So team is probably, in my opinion, the most important component out of those three key components: the TAM, traction, and team. Anything else that you consider or take a look at? Cool. All right. So, an interesting question. We kind of addressed this, but are there any other ways or loopholes, quote unquote, being an angel investor or writing a check if you don't qualify for 200K yearly income or $1 million net worth? We talked about, SPVs perhaps, or crowdfunding, but is there anything else that we might be missing from anyone's perspective? Maybe I'll Natasha, looks like you're about to.
I have. I was gonna say I have a advice that I cannot stay as a lawyer. So,
Well, never mind.
but yeah, but my this partner I used to work for when I was a baby attorney, and we were talking about investing because he runs this fund by himself, kind of outside of the legal practice, and then he's like, just tell them you're accredited. So that's where I'm gonna leave it, but don't do that to Patrick.
No, don't do that. We will check. We have a pretty robust back channel tool that we use to make sure that everyone is accredited.
I can vouch that they do that.
Just if you do invest and you're not accredited, it could get you in a lot of trouble in terms of fines. Also, the startup itself or the fund itself. So just make sure that if you are, but that shouldn't. It's an annoying limitation for you from building a portfolio. So it's, again, consider being a venture partner at a fund, for example. Sourcing deals over to a fund is a good way to get equity in a company and claim that you diligence the deal, and you don't have to be an accredited investor to be a venture partner or a venture scout. Consider these SPVs, consider crowdfunding as well. Excellent. So this is kind of a question that I feel like I'll read it aloud and then I'll answer it and see if anyone has any insight here as well. But with a fund that's mission driven, but also focusing on getting ROI for investors, how do you highlight the mission and avoid it being viewed as solely an impact type investment from future LPs? So Zen, I'd love your insight here. I'll kind of give some context. For Chasing Rainbows, we are ROI first, right? So we plan on having high return for our investors. However, inherent in our mission is that we are empowering an underrepresented community, the LGBTQ+ community, our community. So I think it's possible to straddle the world where, because some LPs really care about mission and some LPs really care about returns. So you need to figure out what kind of LP you're going to be, and also as an angel investor, take into consideration that question. And for us, we typically will, do research on the LP we're going to have a conversation with. If they very clearly are more returns driven, then perhaps we'll switch the pitch a little bit to really highlight the tenacity of the LGBTQ+ population. For example, the LGBTQ+ community has more patents than their peers. I think 34%, their higher percentage of exits, 44% than their peers as well. So they're really powerful metrics that we point to that can help push those more returns driven LPs over the finish line. For mission-driven LPs, we obviously focus on empowering the underrepresented community. So we're getting to those LGBTQ+ founders from the trans community that might not be able to walk into a room with, an old school investor who's not going to have any idea what to do in that situation, or perhaps a very problematic thing. I always hear from founders that present as super butch or super femme, and they have to code switch to change their entire the way that they conduct themselves and they pitch in front of investors. And with us, you don't have to do that. And we tell that story or those narratives to LPs that are more mission driven. And that's kind of what closes the gap for them and pushes them over the finish line. But it is an interesting question, Fiona. And Zen, I don't know if you have any insight there as an LP that we, spoke with.
I mean, not really, because I feel like it's not a Venn diagram with one touch point. For me, this feels like almost like two overlapping circles. To me, it is mission driven and high return, because I do have an option of going to a high return non-mission. So for me, I think the decision it didn't exist in two separate planes for me. And it feels like to me, part of the reason I went with this community is because I want the returns, and I want the returns in a community that I'm a part of, which I suppose sounds very much like the mainstream people, right? Their dollars going to mainstream and they're getting high returns. I don't see that as a separate thing, I guess.
Yeah. I think that totally makes sense. Anything to add, Chris or Natasha? I have a pretty technical question next, so hopefully both of you can pop in for those.
I was just gonna say, I think what Den said is right. It's essentially we're trying to create this ecosystem where we, if we're not gonna support each other, if we're in the community and not gonna support each other, who's gonna support us? So, I think this is really the, I think there's a Q&A about, 0.7% of the VC fundings go to LGBTQ plus, companies. So I think we need to change that number so that more of us can be successful, and then more funds can be reinvested in the community.
For sure. Now, I know when I initially posted about this event, I alluded to taxes, which are terrifying to everybody in the entire world. And perhaps we don't have any hard and fast information within the panel, but it's a fear, or not necessarily a fear, but a reality we all have to live with. When you have an exit or you're dealing with your tax as an LP, when you're getting your K1s, I couldn't think of the word K1 for an LP. And as an angel investor, you're dealing with different tax forms, that you're going to have to deal with when you're preparing your taxes. Do you have any insight as to what those might look like, or how complicated or onerous, or perhaps how big of a headache they are? Chris, I'll start with you. I don't know if you prepare clients since you're.
I'm just smiling at this because I know I cannot reiterate enough. Just be organized, right? If you're going to do this, be organized about it. And that may mean you're working with an accountant, and like they know what they need to be informed. Your team needs to know what's happening so that they can help you understand deadlines, forms, plan appropriately for taxes. I mean, this is all part of building a financial plan for you. Every decision you make touches money, and these investments touch different aspects of your wealth wheel. And so I think part of it is working with a team to help you be organized around these investments and to plan appropriately, whether it's the returns you would expect, how to allocate appropriately for taxes if things go really well, how do you take advantage of things maybe not going so well? I think that's all part of the conversation, and leaning on that team to keep it buttoned up for you, and informing you as much as you want to be informed of what are deadlines and what to expect on that journey.
For sure. Natasha, anything to add there?
Yeah, so it's essentially when the company exits, when they sell and you get paid for the proceeds, that's when you have to worry about taxes. So if you're an angel investor, you get the funds from, let's say the company is sold to Google or Apple or a big company, and that's when you pay taxes on that. If you're an LP, this is it, depending on how the fund is set up. So either do they pay per each exit, or do they pay at the end? And you, like Patrick said, you get a K1, so the fund doesn't get taxed, but the income and losses, anything is passed through to the general partners and the limited partners. So they report all those on their personal taxes. So like Chris said, there's not going to be one, this is the answer. It's really about kind of thinking about the situation and what would be good and bad for you. And I will throw out one thing there is like for QSBS, so Qualified Small Business Stock, which is a great tax advantage for everybody. When you're an LP, the fund will kind of look out for that, especially early stage. You definitely qualify to get up to 10 million or 10x the amount you put in tax free, but you have to hold the things for 5 years. So if you're an angel investor, you may not see that as much, whereas like for a fund, even if there's an early exit, they can continue to invest that dollar, and so that you meet that holding period for tax purposes.
Excellent reminder. Folks really don't know that exists, and it needs to be screamed from the rafters as much as humanly possible. And we do only have 5 minutes, so I'd love to close out, with any final thoughts or advice or anything that you might wish that you had said during this presentation or panel, excuse me. And perhaps I'll start with let's start with Natasha on this one. And any closing words or closing thoughts on being an LP, or perhaps making the decision to be an angel investor as well.
No, I'm excited that there are, a large turnout for this, because I think the educational part, and like Patrick said, letting people know that this is not a scary thing, and just hearing, like, having value aligned, doing impact investment. I'm really excited to just see that and see, people are interested in doing this.
For sure. Yeah, I think the population of LGBTQ plus folks and allied folks that are getting interested, underrepresented communities in general that are interested in being an LP and getting in as an angel investor for founders from their community is increasing year over year. And that can be attributed to the StartOuts of the world, of course, and these ecosystem builders that have set the foundation for all of this amazingness to occur, including allowing for Chasing Rainbows to be a fund and exist today. Chris, over to you.
I think my parting word of advice is to create a plan. If this is something that you're passionate about and you want to do, where does this fit into the overall context of your investment strategy, of your financial plan? Where are you now? Where do you see yourself going? And how do you be intentional about participating as an angel investor in LP to help get you where you want to go? So not taking any unnecessary risks, but also participating in communities that you're passionate about. And so my advice would be to partner with someone, find an advisor, other mentors who can help you construct your plan for how to be intentional about doing this kind of investing, because it is risky. And so you need to be mindful of those risks and potential consequences.
Thank you so much. And Zen, final word.
Yeah, it was always a mystery in this kind of mythical place, investment, angel, LP, and people who kind of walked around and who I bump into was like, how do you do that? And so I think what parting words here I have is, it actually is quite accessible. It might feel like a lot of jargon, it might feel like just it's out of reach, but it really isn't. And I think as we get more and more awareness built around our community and in investments, I think a lot more people can be involved. And I mean, I'm still very new to it. And so I'm kind of learning as I go. Being a part of this community is super helpful for me. Even working with, Ben and Patrick, thank you both very much for just kind of explaining a lot of this stuff to me as I was kicking tires and putting you through the ringer. But it was very accessible. And I encourage anyone who's interested to not step away because it feels like it's far, or just give it a shot. Have a look. I'm not giving you advice. I'm not telling you to invest in anything. What I'm saying is examine it, check it out. It's a lot more accessible than I think it used to be. And I think that's what makes this really, really cool and special.
Thank you so much. Yeah, this new generation of LPs and angel investors and emerging managers and VCs, I think, are really pushing the envelope in terms of getting capital to undercapitalized communities like the LGBTQ plus world. And it's been a pleasure speaking with the three of you. I can't wait to further engage with each of you. I'll probably have a debrief. And thanks again to StartOut. If you have any questions about StartOut, www.startout.org. Chasing Rainbows is chasingrainbows.vc. Check out our website. I put my LinkedIn in the chat. I think Chris did as well. Zen and Natasha, feel free to share yours if you'd like, but we're not hidden. So you can find us if you'd like. Thanks again to everyone. Have a great rest of your week, and we'll be in touch.
Bye, everybody. Thank you.
Bye. This is
Bye.
recorded. Clear that out. Thanks.